Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me for today's market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thank you so much for joining me.
Oh, good morning. It's great to be here. I see you're wearing green today, which is awesome because the New York Liberty rang the opening bell and the color is green.
Yes, the champions of this year's season, and they're supposed to have a ticker parade down at the New York Stock Exchange area on Wall Street on Broadway tomorrow.
And it's tomorrow at 10, so I have to figure out a way to be able to get onto the floor here. But what I'm really hoping for is maybe in a couple of weeks we get another ticker tape parade for the New York Yankees.
Yeah, that would be great.
Yeah, I remember my first one. It was really it was summer of 1991, and it was for the Gulf War in Iraq. And they had a big parade, and I was a summer intern just down the street, working for J.P. Morgan, and one of the traders took me out to say, "Hey, let's go." I'm like, "Are you sure it's okay?" She says, "Let's go." And it was really remarkable. I remember that very, very well. But today, actually, it's a special day. It's the National Day for Hungary, and actually commemorates in 1956 when the Hungarians rose up against the Soviet Union. And for 3 weeks, they were looking pretty good. And then Moscow had enough and came in with tanks. And crushed the 1956 Hungarian uprising, but the Hungarians always remembered that, and they finally got their liberty 35 years later. There's also actually the great Brazilian footballer Pele's birthday today.
So a lot to keep in mind as we head into today's session, but unlike the color that we're wearing, the markets are not reflecting this, and markets are in the red this morning. This does come after a mixed close yesterday. We are seeing the Dow, Nasdaq, and S&P 500 in negative territory. Right now, the Dow is off about 290 points, or 0.7%. The Nasdaq is also lower as well, pulling back by 0.7%, and the S&P 500 is off by 0.5 percentage point this morning. Now, Tai, we got some homes data this morning from the U.S. Existing home sales fell to the lowest since 2010. And we saw that the median price of an existing home sold in September came in at $404,500, which is an increase. But that decline in existing home sales, what is that telling you?
I think that what that says immediately is the market and buyers are waiting for better mortgage rates. The weekly mortgage rates came out this morning, and they were unchanged from last week at 6.52%. But the market, at least the consumer, is thinking the Fed is going to cut rates. Let's just wait because we're putting on a 30-year mortgage, 25 basis points. 50 basis points, that sort of matters. And sure, you can refinance later on if rates go lower, but that's work, and that's also refinancing fees will usually run into thousands of dollars. So, the great thing about the U.S. mortgage market is you're not locked into a mortgage. You can refinance when it suits you. It does suit the mortgage companies as well, but certainly when it suits the consumer. But I think this drop, and it's been trickling lower. So it dropped a bit over sort of month over month, but it is close to a 14-year low, and it just is how much the market is waiting for lower rates to sort of boom a little bit more, at least certainly for housing.
And you brought up the Federal Reserve, so it does take a while for something like a rate cut to work its way through the economy and start affecting different parts of the economy. So whether we're talking about housing or other areas, whether we're talking about savings rates or we're talking about other rates in the economy. So I do want to get your take on the Federal Reserve meeting that is coming up next month. So we're doing the countdown to November 5th, the election day, but we know that the day after the election, hopefully we have better idea of who will be in the White House, but if not, the Federal Reserve will be kicking off their two-day meeting on November 6th with the rate decision on the 7th of November. So in terms of what you're paying attention to when it comes to Fed funds futures, what we're seeing in terms of fluctuation, where are we right now?
So the market has basically priced in 85 to 90% the chance of a cut in November at that meeting in November. I think that's right. I think that's 100% pretty much, unless something dramatic goes on between now and then. And even if it's something dramatic, they're more likely to cut rates than raise rates. I can't see any eventuality where the Fed has to raise rates or really even stay flat. Between now and the next meeting. So I think 25 points is basically baked in. What's uncertain now is that December meeting, the last meeting of the year. There's only 67% of folks think there's going to be another rate cut in December. Now that's actually been largely unchanged over the past few days when the bond market has really taken a hit. I think it's likely to see 25 basis points. I think they have room, given where the rates are where they are, to cut. Now, if you get a sweep by either side in the election, which is possible. In fact, I'm going to go a little against the grain and say, a Democratic sweep is probably more probable than a Republican sweep in a way. But a Democratic sweep could really turn things upside down, because then you only have the filibuster rule in the Senate that prevents certain crazy things from going through, and you can actually pass budgets through reconciliation, which they've done before, and that only requires 51 votes. And if Harris wins, then the vice president will get to cast any tie-breaking vote. So if the Senate breaks 50-50, it will functionally be a Democratic Senate. So I think there is some risk there, but not really high. And you mentioned that we've mentioned many times here, we hope we find out sooner rather than later. The Cook Political Report had a piece out yesterday, and they're pretty nonpartisan. They do good work. They said, well, probably we might not know the presidential results for maybe a day or two, depending on how close everything is. The Senate may actually take as much as a week, because some of these really tight races, I'm sorry, I made a mistake there. The House might take as much as a week, because some of these really tight races, and right now the House is closely divided but in favor of the Republicans. Some of these races in California and in New York, particularly in Long Island, are very, very close, and both these states count very slowly. So it could be a week before we know the House, but we should know the Senate within maybe even the next day or a day after that. So those are the things that we're watching for. And as long as I think if there's a sort of a divided government, I think that makes the markets most happy. So Donald Trump, where he just said I think yesterday, he says, well, I think we're going to give tax cuts, tax write-offs for people who buy, American cars, but only if they're made in the United States, not if they're foreign, made cars. And he didn't specify whether it was, domestically built foreign cars, but nevertheless, if you said I can buy, a Ford made here, or I can buy a Kia made overseas, I could take a tax write-off on that. That's going to actually change some minds. So I think this is one of the things that is getting the market really, really worried in terms of the bond market, and that moodiness is coming over into stocks.
Yeah, and as we edge closer to that November 5th rate, we're going to see headlines regarding the campaigns of both sides, including Trump and Harris. And I'm sure as we get closer to that date, we'll bring you coverage regarding what we're seeing in some key areas here. But you mentioned the bond market, and I do want to focus on U.S. Treasury yields, because we saw 4.2 yesterday, and here we are edging closer to that 4.25% level for the 10-year yield, and I think that is telling you a lot when it comes to expectations. But what are your concerns here? So
what we're seeing actually is, over the last few days, is the 10-year and the 30-year, the longer term of the bond market really shift higher. And so if this is, the 2-year and this is the 10 and the 30-year, the yield curve has steepened, has gone this way. And what that represents is the 2-year really hasn't moved all that much. It's shifted up, but you're seeing most of it in the long end is what's called a term premium. If you were to lend me money for 2 years, you'll say, all right, Ty's probably good for a couple of years. I'll charge him, 4%. But if Ty said, hey, can you lend me some money for 30 years? It's going to be like, where's Ty going to be in like 10 years or 20 years or 30 years? you're going to ask for a term premium. You're going to say, well, if I'm going to lend you money for that long, I need a premium for that. I remember for the longest time, the market, the yield curve was actually backwardated, where the 2-year was substantially higher than the 10-year because they thought rates were too high now and were going to come down. But with either Harris or Trump both likely to be big spenders, and Trump a little more concerning because he may not spend as much, but sounds like he's going to cut taxes, or try to at least cut taxes very substantially. But he can really only do that if he has the House as well as the Senate. If he's going to cut taxes substantially, the deficits are going to balloon. They have to borrow a lot more money. So as Trump has crept up in the polls over the past couple of weeks, the market's getting worried about what the fiscal situation is going to look like in 5 years, in 10 years, and that's why we're seeing the sell-off on the long end of the market. I think where the market is not quite there, but starting to get a little bit over its skis. And I'm looking at things like TLT, which is the ETF that gives you exposure to Treasury bonds, 20 years and longer, or U10, UTEN, which is the 10-year bond ETF. I'm thinking about starting to maybe look for places to buy some, some of those ETFs there, because I think the market is a little bit too worried. They're climbing a wall of worry, the bond market. And the bond market is known to do that, but eventually things do sort of come back to normal. I mean, the yields are not going to 5%, at least not in the very short term. Certainly not going to 6%. So I think there's some opportunity here, but maybe not quite yet. But still.
Well, we'll keep an eye on those yields as we head into the rest of this week and, of course, next week as well. So I do want to very quickly take a look at what's moving the market in terms of individual names.
Yeah.
It is earnings season. Just very quickly looking at laggards for the Dow, we're seeing McDonald's lead the way lower, down by nearly 5%, followed by 3M and Boeing. So let's get into earnings, Tai. Were there any surprises for you this morning?
Well, we should cover McDonald's, because I'm a big McDonald's fan. My kids are big McDonald's fans. The great thing about McDonald's, you go and you know what you're going to get, right? Well, they had a little problem yesterday. They took a little hickey because they had an E.coli outbreak, apparently tied to some of their slivered onions that go into the quarter pounder with cheese. And that came out after the close, and one person died, scores of people sickened, and the stock after hours was down 9%, which is quite a shock. But I think that's a lot of stop losses. That's terrible liquidity before the story really gets out. But I think they've gained back 3% of that loss already, and I think it's just one item on their menu. It sounds like they figured it out. So unless it worsens, it's not going to be bad as sort of Chipotle. When Chipotle had that problem 10 odd years ago, when I think it lost maybe 35% of its stock price before it really started to recover. I don't think McDonald's is going to be quite like that, but it'll have a rough patch for a couple more days. One thing I did want to talk about actually is Boeing. Boeing, we're waiting for pretty much all the earnings bad news is out. They came out and lost billions and billions of dollars. I think it might have been $10 billion in the third quarter, or $6 billion. But they have some cash reserves. I think they have $10 billion in cash reserves, and they're looking to raise more. So a lot of it is going to be how that vote goes over, and we'll find out late tonight whether or not the union workers approve the new deal. I think it's going to be tight. If they don't approve the new deal, I think Boeing will continue its grind lower. If they do, then we may get a relief rally in terms of a slow move back higher. They have lots of issues, but if this is past them, you're going to be able to you might give the new CEO some room to work. Just like Starbucks actually. We should talk about Starbucks. Starbucks pulled guidance, and they really had a terrible run. We were talking about this before the show today, where I guess their prices have gone up significantly.
Substantially, yes.
I think you and I might be the only people who still just go in and get. I just want a venti dark roast. I like to take mine with oat milk, but I guess it used to be what, $3, and now it's probably $4.50, and
it is considerably more.
Yeah, it was surprising how the year-over-year numbers were dreadful in the U.S. and in China, but what they did was they pulled guidance for 2025. And when you pull guidance, usually the stock collapses.
Yeah.
But there's a new CEO there as well, a guy named Brian Niccol, who, by the way, actually turned around Chipotle. So when his name was announced, the stock absolutely gapped higher, many percent. And Starbucks opened, I think, 3% lower, but it's actually gained back most of their losses. And I think they're giving Brian Niccol a shot at turning Starbucks around. And again, it's sort of when you're the new guy in the block, let's get all the bad news out right now, and then I can start from a clean slate. But I think some of these things are really just giving the market a little bit of a bad mood. There was some news about one of Qualcomm's companies that they deal with withdrawing their right to use a patent. I think ARM and Qualcomm. That's giving tech a little bit of a bad mood today. Nvidia's down, which is, I think, why so many of the overall averages are down so far. So we might be in a little bit of a muddling patch here. I don't think we'll see a significant sell-off, but looks like the grind up 0.3% every day might be on hold for a little bit.
Yeah, and as you mentioned, we'll be keeping an eye on what happens, especially when it comes to Boeing, because that's a name that we have been talking about, and this week does mark week 5 for that strike. So we know that with each passing day, that does affect the organization. And as you mentioned, when it comes to their suppliers as well, there's so many moving parts. So it does affect the company moving forward.
One of their suppliers announced just the other day that they had laid off 600 or 700 workers because they, I guess Boeing's not paying. They're conserving cash, so they're managing payables very closely, and I'm sure they've told them, listen, when there's a strike, we're not buying anything from you, so you've got to take care of your own. So the impact of that strike is being felt down the line, and hopefully it's the end of that strike. And on that topic on earnings, we get Tesla after the close today. I'm sensing that the market is pretty bearish and probably a little short. So if there's a surprise, we could get a short spike higher. Whether it's going to be long lasting, I don't know, but I think the market feels a little short, feels a little gloomy on Tesla right now.
And we'll be bringing you the latest on Tesla in tomorrow's show once we get that earnings out from the company later on today. So I do want to very quickly get your take on Philip Morris.
Yes. Well, Philip Morris, had really great earnings. The stock rallied tremendously yesterday. Opened a little lower and is up today. I don't know how much more running room they have if it's really going to break out, but they have this product called Zyn, which is brilliant in terms of it's sort of, I think, vegetable matter imbued with nicotine that you tuck into a little pouch between your lip and your gum, and it gives you that, gives smokers that hit. And it's much less messy than chewing tobacco, which is you have to spit all over the place. And one terrible thing about chewing tobacco, as someone who used it for many years told me, they actually put little glass shards in there, so they'll cut your gums to help the absorption of the nicotine, which is really like ill, and it's really bad for sort of mouth-related cancers and trouble with your gums. So this is a brilliant thing. As a matter of fact, I should tell you, I tried it because I don't smoke, but sometimes I always get tired. I get tired behind the wheel. I get tired when I'm reading things, and sometimes I get tired, in church. And I said, I've never tried it. I should be pretty sensitive to nicotine. So I tried one of these. And wow, I'm not sensitive to caffeine, but this packs a wallop. I had to literally lie down for 45 minutes to let the sort of feeling pass. But it was really tremendous. So that's been really successful and a lot healthier. And I think you look at the tobacco companies and they realize that tobacco is probably a slow runoff business, and they've gotten into vaping, which turns out maybe not as good in terms of long-term issues with the lungs, and we still don't know that. But this Zyn stuff, vegetable matter and nicotine, wow.
Well, it's really interesting because when you look at the packaging for Zyn, it's all over social media, but it also makes you think, do you remember back in the day you could get Nicorette gum at the pharmacy.
Yeah.
This seems like a snazzy repackaging of the same thing. Do you know by any chance if it's any different from Nicorette gum?
You know, I've never tried Nicorette gum. Maybe I will at some stage. Maybe it'll pack a little less of a punch than that Zing. I remember, I tell you, I just broke out, and that's when I got to lie down.
Well, I think it really speaks to the changing nature of the tobacco business, because you think of a company like Philip Morris, and of course there's that transition into so-called healthier smoking, which was the vaping that you mentioned, and it turns out it's not so healthy after all, and you're actually absorbing vapors, and there's been a rise in lung-related diseases for people who have been vaping. But I personally haven't tried Zim, but when I look at the packaging, it really makes me think it just looks as though it's repackaged Nicorette gum.
Now maybe I will try Nicorette and I'll report back. But thank goodness I didn't try that Zin while I was driving. I'll certainly have to say that. But there's a funny story here. Way back when Ben Bernanke was nominated to become the head of the Federal Reserve, and you had to like sell everything because you're head of the Federal Reserve. You really, can't have any holdings. The one company that he requested quite strongly that he'd be able to continue to hold in his portfolio was Philip Morris.
Oh.
He didn't want to give up his Philip Morris shares because I guess, it's probably a great dividend, throws off cash, but Philip Morris is what he wanted to keep.
Well, that is interesting because it does bring you back to a different monetary policy cycle when we think of Bernanke. So, Tai, before we wrap up today's segment, I do very quickly want to ask you about another consumer name, actually two, Costco and Peloton. What's going on with those two companies?
So, apparently Costco has announced that they're going to be partnering with Peloton, and they're going to sell their bikes with some of these packages in the stores. I'm not really a biker, and I've never really used a Peloton bike. Have you? Do you have any thoughts on that?
Actually, before the pandemic, I used to go to a Peloton location here in New York City in the Chelsea neighborhood, and of course, with the pandemic, that outlet shut down, but they have continued with their online classes, and I continue to be a member, but I only access the app for the cycling classes maybe 2 or 3 times a month.
Do you think that it's going to actually be a big hit having Peloton at Costco? How much is a Peloton bike? I have no idea. I'm kind of a troglodyte.
I personally tried to get a Peloton bike, but at the beginning of the pandemic there was a scarcity and it would take months to actually get one. So I just got the app on my iPad and I purchased a stationary bike that wasn't a Peloton bike, but they are quite expensive. They have refurbished bikes now that are cheaper. But I think if you're into spinning, I personally am. I prefer going to studios so I can get the music and the energy pumping through my system.
So what does one of those cost? Do you have any idea, the Peloton bike? What do they cost?
I don't know the most recent model, but I'd say on average around $1,000. The other competitors, whether we're talking about SoulCycle or other new spinning companies, they have come out with different models, but in terms of adoption, I think it can be challenging.
I wonder how that's going to do, because you could say, about $1,000 will be great for a Christmas gift, but what happens if you're a husband and you say, hey honey, I got you a Peloton bike for Christmas? Is your wife going to say, oh, that's great, or are you calling me fat?
Yes, I know. That could be an issue there.
A little dangerous, but I'm interested to see how it how it works out for Costco.
And they're selling not just gold bars now.
Right. I still see the gold bars, but I can't find those platinum bars that we once talked about. Those things, I think maybe it was a tease. Did they ever really have them?
Well, we could contact them to see if you can get them.
Well, so listen, give me one out.
Something to put on the holiday list for sure. Well, Tai, as always, thank you so much for joining me, and I look forward to speaking with you again on Friday.
Yes.
Thank you, Tai. And coming up, I will be joined by Larry Raymond, who's the CIO of LGR Capital Management. We'll be right back. Don't go away.